Hello and welcome to another edition of FMR Finance Weekly, specifically curated for our NRI viewers. We sincerely thank all our NRI friends for their positive feedback and appreciation for our videos. Your reviews and feedback are essential in helping us improve and identify topics where you need more information. We truly value your input. Now let's deep dive into today's topic of discussion. In this segment, we are going to explore a very important financial aspect affecting NRIs, that is gifts. We will cover whether NRIs can receive gifts, whether NRIs can give gift to anyone in India, the tax implication of these gifts, what can be gifted, and the tax consideration for gifts specifically in USA and other related concepts to gifts. There is a lot of critical information with very fine details that all NRIs need to be aware of. So we highly recommend that you don't skip any part of this video. It will be incredibly useful for any NRIs who is either planning to give or receive a gift. So stay tuned until the end of the video and please subscribe to our channel as your support helps us to create more content and deliver the information you need. I am Chaitnya Garg, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.
Let's begin with a brief history of gift tax. Prior to 1998 in India, gifts used to be taxed in the hands of the giver in the form of gift tax. However, in 1998, this gift tax was abolished. Subsequently, in 2004, a new tax on gifts was introduced in the income tax, according to which tax would be levied in certain cases in the hands of the receiver. We will explore in detail what exactly these rules state, specifically from the standpoint of NRI. Let's see what kind of gifts can an NRI receive. NRI can receive either by way of gift or by inheritance any of the following 5 assets class in India. First, money or liquid funds. Second, immovable properties. Third, jewelry, painting, art piece or other valuable goods. Fourth, shares in companies registered in India. Fifth, shareholding in limited liability partnerships, that is LLPs. If the NRI receives any of these 5 assets as a gift or by inheritance, then any such receipt will be regulated by FEMA guidelines and Income Tax Act. Let's see what these guidelines as per FEMA and Income Tax state about each of these gifts separately. First, let's get to know the regulations around gifting immovable properties. Gift of immovable property located in India is permitted to NRI. However, the immovable property being gifted cannot be an agricultural land, farmhouse or plantation property. The immovable property or any sum of money gifted to NRI will be exempt from tax under certain conditions only. The 7 main conditions are that the gift to NRI has to be either made first by any relative, second, on the occasion of the marriage of the individual, third, under a will or by way of inheritance, fourth, in contemplation of death of the payer or donor as the case may be, fifth, from any local authority as defined in the explanation of section 10 subsection 20. Sixth, from any fund or foundation or university or other educational institution or hospital or other medical institution or any trust or institution. Seventh, from any trust or institution registered under section 12A or section 12AA. These are the specific cases where tax exemption is available on gifts to NRIs. However, I would like to highlight that the gift of immovable property is allowed even to the NRI who is not a relative. The only catch here is that as per income tax rules, if the gift is without a consideration and to a non-relative, the receipt of gift is taxable in the hands of the recipient. To determine the deemed income that shall be taxable in the hands of the receiver, we will need to consider either of these 2 scenarios. First, if the property is gifted without any consideration, then if the stamp duty value exceeds rupees 50,000, the stamp duty value will be taken. Second, if the property is gifted for a consideration, then the actual value of the property will be taken. I would like to point out that the NRIs are allowed to repatriate the sale proceeds of such gifted properties outside India from his NRI account within the allowed limit of $1 million per financial year. Now let's have a look at the applicable guidelines for NRIs wanting to gift a property in India. Only residential or commercial property is allowed to be gifted, and that too can be gifted only to 1. A resident Indian, 2. Another NRI, 3. A PIO. My dear NRI friends, please note that the agricultural land, plantation land and a farmhouse can be gifted only to a resident Indian. Further, a foreign national of non-Indian origin needs prior approval of the Reserve Bank before making a gift of a property. Dear viewers, here I would like to inform you about the wide range of services that are offered by FMR, specifically tailored for NRIs to meet the diverse financial requirements in India. Our expertise lies in the areas of direct taxation, beginning from income tax return filing, income tax notices, and litigation and scrutiny cases, income tax consultancy, to new business incorporation, registrations, and related compliance services. You can connect with us on the numbers given below and in the description of the video. You may reach out via WhatsApp, email, or phone call, and we shall be glad to assist you. That's all about gifting of property. Now let's look at the next asset that is commonly gifted to NRIs, that is jewelry. We should first know what is included in jewelry and property. As per income tax rules, jewelry includes number 1, ornaments made of gold, silver, platinum, or any other precious metal, or any alloy containing one or more of such precious metals. It is immaterial whether or not the ornament contains any precious or semi-precious stone, and whether or not worked or sewn into any wearing apparel. Second, precious or semi-precious stones, whether or not set in any furniture, utensil, or other article, or worked or sewn into any wearing apparel. Next, as per income tax rules, property means 1. Immovable property being land or building or both. Second, shares and securities. Third, jewelry. Fourth, archaeological collections. Fifth, drawings. Sixth, paintings. Seventh, sculptures. Eighth, any work of art. I had in the beginning mentioned the term relatives. Now let me tell you who are the relatives that can give gifts to NRIs or receive a gift from an NRI as per Income Tax Act. The list of relatives include: first, spouse, husband or wife; second, brothers; third, sisters; fourth, spouse brother; fifth, spouse sister; sixth, parents; seventh, parent of spouse; eighth, lineal ascendants or descendants of individual or spouse; ninth, brothers or sisters of parents of individual or spouse. The definition of relatives as per FEMA guidelines is similar to the definition of relatives as per Companies Act 2013. It includes spouse, father, mother, son, son's wife, daughter, daughter's husband, brother and sister of an individual. Now let's look at the third asset that resident individual can give to an NRI, that is money or liquid funds. An NRI is allowed to receive money as gift from a resident Indian under the Liberalized Remittance Scheme (LRS) within the limit of USD $2.5 lakh in a financial year as prescribed therein. The donor and the recipient need not be close relatives. A resident individual can also gift money to a close relative NRI via check or net banking to his NRI account in India, subject to the overall limit of USD $2.5 lakh in a financial year. Let me try to explain in simpler words. First, Indian parents can gift to their NRI children money or liquid funds as per the limits defined under LRS. 2. There are no taxes applicable when gift is received from a relative as defined under the Income Tax Act. In other words, if gift is received from a relative as defined under this act, no taxes would be payable. Next on the list of discussion, resident individual making gift to NRI of shares and securities in an Indian company. A resident individual can gift the securities held in an Indian company such as equity shares, debentures, preference shares, share warrants, etc. to an NRI. But resident individual will need a prior approval from the Reserve Bank of India. Also, there are certain conditions that need to be fulfilled first before transfer of shares. The first condition is the NRI recipient is eligible to hold such a security under relevant regulations. Second, the gift does not exceed 5% of the paid up capital of the Indian company. Third, the applicable sectoral cap in the Indian company is not breached. Fourth, the donor and the recipient are relatives within the meaning in section 2 subsection 77 of the Companies Act 2013. And last, the value of security to be transferred by the donor together with any security transferred to any person residing outside India as gift during the financial year does not exceed the rupee equivalent of USD $50,000. Gift of securities are regulated by the FEMA provisions which put bar to a certain quantum, and also prior approval from the Reserve Bank of India is required, and the parties to the gift transaction are required to be relatives. The gift of securities between the relatives are exempt from taxes. However, if between non-relatives, it is taxable where the fair market value of such shares is the basis for computing the deemed tax liability in the hands of the NRI recipient. The NRI can receive the securities on inheritance and no such restrictions are there. The remittance of sale proceeds post capital gains tax should be within the USD $1 million limit. We have looked at all the types of assets that can be gifted to NRIs. Now let's look at the scenarios under which NRIs can make a gift. First on the list, can NRIs gift to his or her parents in India from their NRI account? The answer is yes. NRI can give gift to his or her parent in India from their NRI account without their parents suffering any tax. Next question is, can NRIs give shares to relatives? Again, an absolute yes. NRIs can gift shares to an Indian resident. The gift would not be taxable in the hands of the donor. The recipient of the shares would be taxed in India if the fair value of the shares exceed 50,000 rupees. Third question is whether NRI or PIO or foreign national holding an agricultural land, plantation property or farmhouse in India can gift the same? Yes, NRI or PIOs can gift such property only to a person resident of India and a citizen of India. A foreign national of non-Indian origin would need prior approval of the RBI for such a transaction. Now coming for the last segment, we will discuss about the taxation implications on gifts in the US. In the US, tax on gifts is levied in the hands of the donor or person making the gift and not the receiver. Moreover, this only applies where the person making the gift is a US taxpayer, that is a US resident, green card holder or a citizen. Where a gift is made by a person resident in India to a US person, no gift tax is payable as the donor is not a US taxpayer. However, the person receiving the gift, being a US taxpayer, must fill up Form 3520, which is annual return to report, that reports the transaction with foreign trust and receipts of certain foreign gifts. If a US person receives a gift of more than USD $1 million, then Form 3520 should be filled. If the amount of the gift is less than $1 million, then no Form 3520 is required to be filled. Here the point to note is that NRIs can make gifts of up to USD $13,000 per gift to as many people as he likes in a year without paying any gift tax. The only thing to remember is that each recipient must not get more than $13,000 in the year. Also, this is an individual limit. So a couple can make gifts of up to $26,000. Let's look at an example. If NRI gifts his mother USD $13,000 and his brother another $13,000 in 2012, he pays no gift tax in the US. Let's recap today's learnings. Today, we explored the topic of gifts to NRIs. We began with a brief history of gift tax. Then we learned about what can be gifted to NRIs, mainly money, liquid funds, immovable properties, jewelry, paintings, art pieces, shares in companies registered in India, and holding in limited liability partnership LLPs. What are the tax implications if the NRI receives any of these assets as a gift or by inheritance? What are the applicable regulations of FEMA and income tax? We delved into who all are regarded as relatives and who can give immovable property to NRI and what conditions apply for tax exemptions. The NRIs can take out the sale proceeds of such properties outside India from his NRO account within the allowed limit of $1 million per financial year. So that's it from my side. For any personalized assistance or further clarification, please reach out to us at the contact details provided in this video and in our description. Please connect with Team FMR or myself for any of your financial query. Stay tuned for more insights on maximizing your financial opportunities. And don't forget to like, share and subscribe to our YouTube channel FileMyReturn. I'm Chaitnya, your tax advisor, making finance friendly.
FMR Finance Weekly. Simplify your life with our financial advice.